Welcome to the show. Today you're going to meet Aman. He grew up in Toronto, lives in the Bay Area, former Harvard lecturer. He's been on CNBC, Fox Business, and so many other outlets. So we're so glad to have him on the show talking to you, founders, investors. And now he's the GP at Practical Venture Capital. He's got a book coming out on financial bubbles in February, which we're going to get into. But before we do, a couple of highlights. I think what's really cool is that Aman has worked on the financial and operating compliance processes at PayPal, eBay, has advised startups through IPOs, has done millions of dollars in financing campaigns and all kinds of cool things across different banks, and has an awesome track record of helping companies grow. So, Aman, first, welcome to the show. First question to get right into it. It's 2026 now. What is the current status of venture capital in the financial markets right now in 2026 as we get going?
Well, thank you, Shane. That was a very kind intro. Appreciate that. I think it's really exciting in 2026. We've had probably 4 years now from 22, 23, 24, 25, when it seemed like volumes were down. The people who were getting money were disproportionately it's like larger funds. Then we had a lot of excitement in 25, but a lot of the AI excitement, I feel like, dominated the news and maybe sucked some of the oxygen out of the room for people who weren't solely focused on that. But I think there are a couple of good things happening now in 26 that'll benefit the market. One is the fact that we're now getting some IPO activity. It kind of started in the second half of 25, but it looks like 26. Well, there's a ton of great companies that are lined up to go public in 26. The quality of those companies, I think, is really high. The bar for an IPO, I think, is higher now than it's ever been, and the companies that are going to have to jump over that are really high quality. So that's exciting. That'll bring some liquidity back in the market, and I think help feed the ecosystem. So that's one thing we're seeing and looking forward to. I think AI will be the big story of 26, like it was the last few other years. But I think it'll be an opportunity for AI to become more business friendly. Like it'll be less of an idea and more about AI enabled businesses that can make money. So that'll be exciting. And then I think you asked about the macro markets, and everyone I'm talking to is concerned about valuations and bubbles, and are we in a bubble? And it just feels to me like there are a lot of good reasons to be optimistic about 2026, especially in the US. I'll give you a couple of highlights. One, the US economy is expanding, not contracting. We've seen a couple of quarters now of like 4% US GDP growth, which is more than it's been in the last 5 years. So, that's good. And then compound that with the fact that the Fed is easing, and it's moved from interest rate increases and quantitative tightening to quantitative easing and rate cuts. And we've just never had a down year in the stock market when those things are true. I've looked at 110 years of US history, and we've never had a down year in the stock market when the economy is expanding, not contracting, when the Fed is easing and not tightening. And so that to me feels like it sets up hopefully for a really good and exciting 26.
Those are a ton of reasons to be optimistic. And, to give context to people who are listening, can you don't just become a GP overnight or born a GP or born knowing all these facts about markets and financial operations. Can you real quick give us like the arc of from PayPal and speaking with your mother in Toronto to today? What's like the quick arc real fast?
Yeah. So as you said, I grew up in Toronto. If you'd asked me what I wanted to do when I was like, 15 years old, I think I would have said I want to be an investment banker. So unusual, I kind of got past the I want to be a police officer, I want to be a hockey player phase, probably when I was about 15. And then, and I was like reading the Wall Street Journal as a kid, and I was just interested in markets. And my mom and my dad wanted me to be a doctor, and they had, different plans. Even today, I don't think my mom can really tell you what I do for a living. Oh, he's in business, I think she would say. But she would know, and I've always been interested in financial markets and finance. So I kind of read everything that I could about that stuff as a kid. Went to Stanford undergrad, worked on Wall Street for 3 years, had a blast, great training if anyone's thinking about going to work in an investment bank as a career. But while I was at Stanford, I met Peter Thiel. And this was before he was really Peter Thiel. I mean, he was Peter Thiel, but this is before he went on to found PayPal and did all the great things that we now know of him. But he and I hit it off, and he was at the law school and I was undergrad, so we were not quite overlapping, but we were running in some of the same circles. He offers me a job at PayPal after I graduate. So I don't go back to Wall Street. I go to PayPal. I had 3 years at Harvard Law School, so I just love that and really enjoyed that as well. great, again, a great degree. Even if you don't practice law, it's opportunity to be curious and learn about a lot of things. So I took all that with me to PayPal when I was kind of the junior guy on the IPO deal team back in 2002 when we went public. That was my first job there. And then 8 years later, I was running finance for PayPal, and then I was CFO at eBay's North America business, and I've had a few CFO jobs since. The biggest one that your listeners may know about is Sonos, the consumer electronics company. So, working with investment bankers and tapping capital markets. And so a lot of operational experience, which I think is a great way to learn about how to build businesses and communicate to shareholders and build value with investors. And then made the jump about 7 years ago now to becoming a partner in a venture fund. I worked at 500 startups for a while, for 3 years as their COO. And then the founder of 500 startups, a fellow named Dave McClure, who I'd met at PayPal, he and I started our new firm together about 5 years ago.
That's great. And how's it running the fund now? It's a total different, it's different than operating as a CFO, I imagine.
Yeah, I think it's more you at a certain stage of being a CFO. I did it for like 15 years, so I had a lot of experience, a lot of chances to make mistakes and learn across a couple of great companies like PayPal and Sonos. The third time you do it, you kind of learn less. It becomes a little bit less interesting. I think some people can do a job for 15 years and or 50 years, I guess, and love every minute of it. I got a little bit. To me, it felt like I was ready to do something else. And as an investor, you're looking at different aspects of a company. You're talking to venture capital funds and private equity funds a bit more as opposed to operating a business. It's just new and different. I think our funds had a lot of interesting successes. We're a secondary fund, so we focus on a niche that we think is really interesting, where we can buy existing investors out of great companies at discounts to fair value. So it requires that kind of underwriting diligence and the ability to think through deals and structure them. It also means finding great companies, great entrepreneurs, great technologies, and that's also just a blast. That's a big reason to get up in the morning.
Yeah, it's so true. Another reason to get up the morning, and before we get more into the business things, is you'd mentioned your mom, and it seems like she has been someone who's like been an important figure at certain points in your life. She might not know exactly what you're doing with secondaries and term and balance sheets and all these different sort of things, but do you guys
Yeah.
ever just chat and just like I gotta imagine she's really proud of you.
I think so. I hope so. I think both my parents are. They're both, they both they were both born in East Africa. My father was born in Nairobi, where I was born. She was born in Tanzania. They met in college. They wanted to go back to East Africa, and I think we're enjoying a pretty good life there. My father was a biochemist, and she was basically a stay-at-home mom, and then kind of got into building a daycare. Um, Great people, humble people, just different values than me, I think, in many ways. And so as I grew older, we kind of grew apart. I was a rebellious teenager. They moved us to Canada because it turns out in East Africa in the early to mid 70s, there was in the neighboring country to Kenya, Uganda, there was a coup d'etat, and a government took over that was just hostile to people who weren't native Africans. So they told Jews and foreigners and Europeans and ultimately people of Indian descent, you got to leave. And there's a great fear that Kenya would go next, and the same thing would happen to Kenya. It never did, but in '82 there was a coup in Kenya, and they suspended elections. And so after all that, my parents decided to move out to Canada. They were very grateful to be there. Canada, like the U.S., has a great immigration history, and they got to be very successful there. And eventually, I'd say I grew up away from my parents as I grew older and just had different ideas, and I wanted to come to the U.S. and work in the U.S., which they kind of never fully understood, but I think they've totally supported. And now that I have kids, we go back every summer, and now we spend time with our parents, and so it's good to they're good influences in my life, even though they are very different people.
Yeah, I think that that's totally normal to be different from your, I think it's perfectly okay to be different than your parents as well. I think that's natural. And as far as like the rebellious phase, I'm with you. I had one of those too. And this is why I'm sort of my heart sometimes goes out to like young people where like when you and I were rebellious, there wasn't like a camera or a microphone in your face all the time. So now it's like it's super interesting being a young person these days And it's just, yeah, it brings a whole set of new challenges, but also like huge opportunities tying back into like all the business opportunities that you're evaluating. Like you're seeing younger people create bigger companies with fewer employees now, especially in the Bay. It's such a
Yeah.
fascinating time. You know, I'm really hearing you today that you're optimistic. And I'm curious beyond just like the 110-year benchmark and reviewing, like what other things have you optimistic specifically about about the world and about 2026?
Well, probably the most the best reason for optimism. I do feel like the kids today. I have a 12 and a 15-year old, so I watch it with them too. This generation does feel a little bit more discombobulated than prior generations. There are stats on mental health. There are stats on how kids are coping with school and social pressures, and I'm not sure how reliable those stats are or how comparable they are with generations. But it just does seem like there's a lot of anxiety within that group of young folks. The technologies they have available and the things that they can do and the wealth that we have in terms of living better, the kind of food you eat. Like if I compare that to what I had growing up in East Africa, like it's no contest, right? We're much wealthier now, and this generation in general is wealthier. My kids will have a better life than I had growing up, and that's not true of every American, but it is largely true if you look at things like just how much do we eat, caloric intake, the standard of living, real incomes, like any way you want, fatalities or infant mortality, the life expectancy. I can't find a lot of ways that really show that people are worse off than the last generation. But there is this weird anxiety that a lot of the younger kids have. So with my kids and with their friends, I try to stay optimistic and just make sure that they're grateful for the things that they have that previous generations didn't. Um, because the technology you mentioned, because of I think the fact that they can get a lot more information a lot more quickly than prior generations. They can start businesses, and one of the things you learn as a business owner is not everything you do isn't everything you do, it's new to you, but it's not new in the world. There are people who've gone through building a finance system or fundraising or launching a new technology and going to market. How do you promote this thing to my customers? All this stuff has been figured and done before, and it's taught in schools or business schools. When 25 years ago, if I hadn't met Peter Thiel, I don't know, how I would have known all the stuff that you get in terms of running a business. Like working for Peter, working for Elon, working at early PayPal are really, really important life lessons. 25 years later, a lot of this stuff is available on the internet. And if it's not, you can connect to people who, through the internet, who can be a mentor or an advisor. And so you don't have to go to Harvard Business School now to have that network anymore. So I would probably counsel my kids, like, don't think about going to a top 10 school or going to a business school just because of the network. Lots of ways to get that knowledge, get that information that wasn't there before. Yes, you can start a business cheaper, easier, faster than before, reach a larger audience than ever before. And we live in a great country where you have permission, not only permission, it is cool to be an entrepreneur in America, right? Like you are encouraged to do it. There's money, there's people who want to help you, there's all kinds of ways that you can reach a huge market. And that's especially true like right now in the Bay Area. There's no penalty for taking risks and failing. If it doesn't work, you can still get a job at top schools or top banks, top consulting firms. That's not true in like Saudi Arabia or Japan. Like try going and failing there as a failed business person. It's hard to get another job. It's hard to bounce back. There's a social stigma. Like something as simple as just if you bring somebody home from school to meet your dad, and your dad says, "Hey, what do you do?" In Japan, if you're like, "Hey, I'm a CEO, startup founder, making basically minimum wage and scratching and clawing by to build this vision," those aren't positive social points. Like that father may not want you to marry his daughter, but in the U.S., it's very different. And so taking advantage of that social permission and those opportunities, I think, is pretty unique for this generation. So a lot of good reasons, I think, to be optimism just in terms of the culture and the place where we're at.
And how about the founders? Let's talk to the founders let's say they're super optimistic, Aman, and nothing's working. Things are failing, things are falling apart. Like what wisdom, what advice would you impart on a founder who's just like knocking on doors, nothing's open, they're frustrated, they don't know what to do? Like what do you tell those founders or those operators who are just like they're at their wits' ends right now?
Well, the best founders that we have worked with, they're always optimistic. They're always insanely optimistic. If you look at their business plans and their visions and the things that drive them, that's just I think a common factor in all great founders. It's almost a delusion if you if you think about it. But if you break down like what you do into small pieces, there's usually some things that are working and some things that are not. So I mean, if you go and talk, if you knock on 10 doors and try to sell something and you go 0 for 10, that happens. If you go 0 for 100, that's probably a problem. Like something is not working about the product or the product market fit, or you have to refine your pitch and keep thinking about what is it that your customers are telling you that you're not getting. But in a very normal business, in a very normal like business pitch, you're going to have a couple of successes and like 10 failures. And so I guess it's no different than like baseball. If you have a couple of home runs in a game, but like four strikeouts, it's still a pretty good day at the ballpark, right? And so focus on the positives and build on that. Have a little bit of a short memory around the negatives. We would normally tell our founders to think about like really talk to your customers and understand the fit between what is the customer problem and what is your solution doing. Are you solving the problem the customer needs, or are you just selling a technology or a solution because you think it's cool? And where the market doesn't necessarily demand it. And I can give you lots of examples of that, but probably four of the five failed startups in our 500 batches that, or the ones that we turned down, were probably cases where the founder had a really interesting technology, thought it was the best technology in the world, but couldn't quite figure out what problem they were solving. So that'd be my best advice to founders.
Yeah, becoming obsessed with the problem, and it's easy to chase the solution, chase the shiny object, but actually there's a lot of wisdom in pumping the brakes and just doubling down on what the actual issue, the fundamentals, the basic principles of like what the problem is that you're trying to solve. We talked a little bit about why we're optimistic about 2026. What about
Mm-hmm.
the year, you have a book coming out on financial bubbles. What might worry you about what's coming, if anything?
Well, there are lots of the reasons to worry about 26 specifically and just where we are in the markets. There are a couple of things about the market now that do rhyme with past bubbles. One of them is the capital intensity of what's going into AI. There's been a rapid build out in AI capex over the past, let's say 9 months to a year, which is beginning to look like the capital intensity of the telecom internet bubble in 1997 to 2000. We're on the order now of something like $400 to $500 billion in AI capex spent on data centers and the infrastructure of AI in general. And the returns, which is something like it's we're getting to the point where we're at 1 or 2% of GDP. At the peak of the telecom bubble, we were probably 5% of GDP spent into telecoms. And so when you see a rapid deployment of capital like that and a rapid run up in valuations, we see this all the time here in the Bay Area. AI companies, series, seed or series A, trying to fundraise at 25, 50, $100 million valuations. And they don't really have a business application yet, but they are sucking up a lot of money. Those are all, yellow or red flags where you start looking at the cash flows and whether the business returns are really there. And so that's kind of one area. It's just the ecosystem and the venture in the venture community able to finance that and able to make money off of AI. The hyperscalers at NVIDIA, I think, are in a really good position. If you look at their financials, NVIDIA is trading at 23, 24, 25 times free cash flow for next year. It's paying dividends. It's buying back stock. They're making acquisitions with cash. Like that just wasn't true of like Cisco in 1999. Cisco was barely making money. I think they made $1.5 billion in their best year. They're trading at 200 times earnings, not 20 times earnings. Most of their customers were telecom companies that were laying dark fiber. A lot of those telecoms were like WorldCom and Global Crossing that ended up having scandals and had to restate financials and then went bankrupt. The customers at NVIDIA are like, they're like Meta and Microsoft and Amazon and Alphabet. So these are cash flow positive companies that have a lot of cash in the balance sheet. Telecoms in 1999 had net debt of 300 billion. These guys have net cash of 400 billion. So the health at the top of the ecosystem in the Mag 7, I think, is really good. And I think AI is real and will create a lot of winners. You do have to worry, though, about when companies don't really have an AI solution and they pitch one, or you get these kind of cozy vendor financing arrangements that create circular arrangements. Those are all yellow flags that we would look at as investors that make us, think twice about certain specific companies or sectors.
Those are such great call outs. And I imagine you touch on some of this in the book Financial Bubbles. Who did you write this book for? Who was in mind? Who were you thinking about?
That's great. It's as you mentioned before, I do I guess lecture at Harvard Business School, and I've been doing that for a couple of years. And I've noticed within our the students, so these are 23 to 27-year-old students, very sophisticated, very financially literate, no businesses, have been around businesses, and are bright as all get out. There's a little bit of a short memory though, as far as history goes. So when I talk to those students about like the 2008, 2009 bubble, or even the 2001 .com telecom bubble, very few of them really know what I'm talking about. Now, I guess in their defense, they're all born after after 2001, so they have to go back a little bit before into history. But I don't think we do a great job of teaching history in our schools, in our high schools, and even in our top universities. So I wanted to write a book for that audience and make it relatable. You don't have to have a PhD in economics or a master's in math to figure out asymmetric pricing and price bubbles. Like there'll be lots of books written about that stuff, and there'll be like 9 PhDs who read it in the Journal of Finance, and then no one will ever benefit from it. I wanted something that like you or I or others could read, and just if you're interested in business and you don't have a PhD in economics, but you like to read the Wall Street Journal or the Financial Times, and you have an interest in, hey, what is this? Is this now a bubble? What happened the last couple of bubbles, and are they relevant today or are they not? What are some of the repeating patterns? What are some of the differences? That was initially the audience, and then I went back to Japan in 1884, and I went back to Amsterdam in 1636, and looked at other factors beyond economics, like what's the social background, what's the political background, what is the history of the Netherlands, why do we have a tulip bubble in 1636, why did it happen in London, why didn't it happen in France, why was it 1636 not 1626? Like all those factors that went in, I wanted to tell more of a narrative that I hope will be. I think it's a good read, a fun read for anyone who likes history, likes economics, thinks about business, and is just curious about this stuff.
That's great. All right. Well, it's linked below. You can get on the pre-order list or even grab a copy by the time this comes out. And it's called Financial Bubbles. And I think that's so compelling. I love the idea of a true sign of intellect and care and excellence is taking maybe something that's complex and then making it digestible and simple. And to use your word, relatable, which I just think is the best. And a lot of times I see this all the time with the startup founders we work with is that when it comes to the numbers, it can be sort of scary. Like, oh, well, like, no, I don't really touch that, or we outsource this. And it doesn't have to be that way. I think if you just take small little bites, then you can sort of have a lot more confidence going into your board meeting or even pitching a prospect when you really truly like know your numbers. So I imagine knowing the cycles will hopefully even maybe build some confidence into people who are trying to build businesses as well.
Yeah, I think what you captured is just that's the art of teaching. When you're able to talk to somebody about something, you know it very well, and they don't. And you can sit down with them and say, this is why this is interesting, it's important. You really have to connect with the student, right? And you'll see the light bulb go off. And in many cases, even at the business schools, you get into the numbers and the economics and the financials of a startup or a business, and you teach them how to pitch, and it just doesn't really connect because that's not how they relate to the material. As you said, some of them find the numbers daunting. Maybe they're just, maybe it's just not their forte, and the numbers can be hard. And ultimately, if you focus on that stuff too much, you can kind of lose the audience and lose the story. So what we try to do in our pitch classes is we focus on the customer and the problem, and we tell them in a 3-minute pitch, you have like one page on the numbers at the end, and you talk about financials and unit economics, and these are the 3 or 4 metrics that you just have to know as like a SaaS company founder. You should know what these 3 or 4 metrics are. If somebody asks you about net revenue retention rate or your unit economics, you should know what it is, and you should have an answer for it. And so that's just financial literacy. But you start with, here's why I'm here. Here's the customer. Here's the problem I'm trying to solve. The pain point I'm trying to get at, and my solution is this. And you make it real for someone. If you can do that, then you're a great teacher. And I've been blessed with being around some really good ones. So I love doing that.
Yeah, it matters so much who you spend time with and who we're like sponges. I really believe that the, 5, 10 people who are in your life the most are ones often who you're sort of almost like becoming, which is just a crazy phenomenon to think about. But it's so powerful and something to keep in mind as we go into the new year, as we go into 2026. So highly recommend pick up the book Financial Bubbles. It's linked in the show notes here. Also, if you're looking for events or connecting with more investors, we have a WhatsApp community. You can join that as well. That's in the WhatsApp in the show notes, and also you can apply for our accelerator as well. It just takes about 2 minutes to apply for it. And I'm just so grateful, so thankful for everything you shared. I cannot wait to grab a copy of Financial Bubbles. I know that there's so much to be excited for in 2025, but I also know that there are like some yellow flags, maybe even a couple red to keep in mind. So it's important to be looking for all of those and then to take action, take imperfect action and go build something that hopefully changes the world and changes someone's life. So thank you for coming on the show.
Thank you, Shane. Appreciate it.